Now, the main event. Without further ado, I am delighted to introduce you to William Mougayar, a 4-time entrepreneur, venture advisor, author, speaker, and angel investor, who has previously held senior positions at Hewlett-Packard and Cognizant. He is also the founder of Startup Management, where he blogs and curates on startups and the cryptocurrency economy. He mentors startups at Communitech, Ryerson's DMCs, and Techstars. And his articles have recently been published in Forbes, Techcrunch, CoinDesk, and O'Reilly Media. Today he's going to be talking on the 4 pillars of the new economy: Bitcoin, block currency, and the transformation of the economy. And I think that one of the things we found is that angels are ongoing learners that love to see how the world around them is developing and understand the opportunities coming forward. And you, William, will be able to tell us that. Thank you so much.
Thanks, Jess. All right, so let me start by asking you a couple of questions. Who is the largest taxi company in the world right now? Uber, right? But you know, they don't own any cars, do they? Good. Who is the largest media company today in the world? Facebook. And they don't create any content, do they? You do. And who's the company with the largest valuation in the commerce side? It's Alibaba. Alibaba doesn't own any inventory, and they are the most valuable e-commerce player today. Who is the largest company that's in the hospitality business and accommodations business today? Airbnb. And Airbnb does not own any hotels, does not own any real estate. So hopefully you're starting to kind of see where I'm going here, is that software is eating the world. And I can assure you that Bitcoin, in a couple of years, is going to be one of the largest currencies out there that is not backed by a sovereign government. You remember when Google was just a search engine? Do you remember when Amazon was just a bookstore? Or when Twitter was this new novelty that you had to kind of post silly things about what you were doing? And look where they are today. But for Bitcoin, the story is not going to end by just being a currency. The Bitcoin story starts with a currency. But it's going to end by even attacking the existing incumbents that we know of today, the Alibaba, the Amazons of the world, and the eBay of the world. I know of a number of Bitcoin companies that are currently working on disrupting the existing web players that we know as leaders today. So that is really what is going on with Bitcoin. So let's start by talking about what is Bitcoin. What is Bitcoin? I mean, the answer to what is Bitcoin is, what would you like it to be? Really, because it's like the internet. If I were to ask any one of you, what is the internet for you? And each one will give a different answer because you each are using the internet in different ways. For some people, it's the email. For some others, it's the content they are publishing. Others are selling stuff on the internet. Others are doing social media. So the internet has been around for a while, and the same thing that has happened with the internet when it started 20 years ago is happening with Bitcoin today, which means it has multiple identities. It is many things to different people, and that is why it's a little bit difficult to understand it at the beginning. And what's interesting about Bitcoin and the internet, and what's really common about each one of them, is that Bitcoin has a very strong narrative. A narrative is more important than a story. A story has a beginning and an end, and it's always the same story. But a narrative may have a beginning, but you make up the ending. The narrative opens up the imagination, and it starts something that you make it whatever you want it to be. And that is really the power of Bitcoin. Now, let's talk a little bit in terms of what it really is, and then I'll talk to you about the identities that we're seeing with Bitcoin. Bitcoin is some people call it an experiment. It's something that this mysterious person by the name of Satoshi Nakamoto, we don't know where that person is. At this point, he disappeared after releasing a paper in 2008. And he solved what was called the double spend problem in digital currencies, meaning that previously we had digital currencies before Bitcoin, because Bitcoin is a type of digital currency. But the problem was that if you spent a electronic amount of some sort, it would have been very difficult to not spend it again without having somebody in the middle to make sure that you only spend it once. So what this person, Satoshi Nakamoto, did, he solved that problem by saying, what if we have a ledger that is common to everybody? Why don't we write every transaction on a ledger, and why not make multiple copies of that ledger so that it's not just in one place? So let's make it a decentralized ledger that a lot of people have copies of, but everybody has the same copy. So everybody can see what all the transactions are on this ledger. So that is a novelty behind Bitcoin, is this decentralized ledger that is open, that is auditable, and that is secure. It is secure because that's where the cryptography comes in, and it merges with computer science. And now I can secure a piece of data with what is called the private key and a public key. It means that it takes two keys to open up the information, and that way it's secure. The analogy is like, if I know your address, your home address, all I know is where you live, but I don't know anything about the contents of inside of your house. For me to know what's inside your house, I would need you to let me enter the house with that key, which you only have a key. But I have the address. I know where you live, but that's it. I don't know what's inside the house. So that's the same concept. Public key, private key, you need both of them to enter. So the public key is like the public address, but the private key, only you have it, so only you have access to what's inside. So what is Bitcoin today? Of course, it is a digital cryptocurrency because it is backed by a security. The security of the currency is the cryptography part, is being able to code it in a way that nobody can see it unless they're authorized to see it. So it's a currency. It's a ledger. We just talked about that. It's an accounting ledger that everybody can see. It's becoming a software development platform in the same way that the internet at the beginning in '95 was just about content. And then suddenly it became a development platform. And now developing on the internet is like second nature. I mean, is there any application that doesn't run on the internet? But that wasn't the case before. A lot of the programming languages, everything runs on the internet now. Same thing with Bitcoin. It is a software development platform. And I'll talk a lot more about that. It becomes a transaction platform too, because now you can conduct transactions, money transactions, and non-monetary transactions as well. And that's a powerful concept. It becomes also a peer-to-peer network because there's no centers. There's nobody in the middle that controls Bitcoin. When I send money, if I want to send you Bitcoin, it's the same as sending an email. It just goes, and then it gets received within a few minutes. So it becomes a peer-to-peer network, which enables transactions, e-commerce, or paying for something on a peer-to-peer basis. That's powerful. The software is open source. It means anybody can look at it, anybody can copy it, and there have been copies of Bitcoin that are doing things that are similar to Bitcoin but different in certain ways. That's the beauty of the open source platform. Open source means as well that anybody on the outside strengthens the core of Bitcoin by adding value on top of it. So the ecosystem that is forming itself around Bitcoin is tremendous. Do you know how many developers control Bitcoin, the core of Bitcoin? 5. There are only 5 developers that control the core of Bitcoin. And you know how many are developing around it? Thousands and thousands. And soon to become hundreds of thousands. So that is really what the power of Bitcoin is. It is small at the core, but it is very powerful at the periphery. And it's really an ecosystem that is forming around it. It is also a computing infrastructure. That is an important aspect. Why? Because there's this concept in the Bitcoin space called mining. Okay, it is not mining for gold or mining for minerals, but it is mining for Bitcoins. What happens is that the Bitcoin network is supported by a bunch of computers in the cloud that run at very high speeds, very powerful computers that heat up a lot because they contain a special chip called an ASIC chip. But let's not go there. But what these miners do, they keep solving these mathematical equations that unlock the validity of these transactions. Every 10 minutes, everything gets reconciled, and all the ledgers around the world are on the same page every 10 minutes. But otherwise, these miners are the ones that are solving these mathematical equations, because that is what Bitcoin is based on, mathematics. It is based on game theory. And these miners are the security that is underneath the network. So it is like having a computing infrastructure so that if you write an application that is a Bitcoin application, a part of that application is already covered. It's free. It's like having a part of Amazon, it's like having a part of your application running on Amazon cloud services, but you don't have to pay for a part of it because it's already covered by the miners out there. So there's a lot of benefits behind that. And finally, it is becoming a financial services marketplace because there's money involved. And it's not just about buying and selling, it's about doing more than that. And I can assure you, every bank in the world is studying Bitcoin right now. They have a corner project. They are studying it. They are trying to understand it the same way that they were trying to do the same thing with the internet back in 95, 96. And I was there. And if you remember, for about 2-3 years, up until 97, the banks did not want to touch internet payments. Why? Because it was not secure. Internet payments were running on this separate gateway outside of the banks because they did not understand it. They didn't know what to do with it. And look now, everything is on the internet. You can check your balances. You can pay people. You can pay your bills and so on. Everything is secure. It turned out to be, they were not ready maybe. And then they got on the bandwagon. The same thing is going to happen with Bitcoin. It is not here to go anywhere. It is here to stay. So there's two aspects. If you want to remember things briefly, there's the monetary aspect of Bitcoin. It is about the money, obviously. But it is also about software applications. It is about a new software development world out there that is writing new applications now on Bitcoin, using Bitcoin and the blockchain. The blockchain is the ledger, really. It's a fancy word for the ledger that I talked to you about, the decentralized ledger. And the blockchain is the backbone of Bitcoin. Bitcoin and the blockchain need each other to work hand in hand, basically. About 2 months ago, I wrote an article called "The Blockchain is the New Database, Get Ready to Rewrite Everything." And that kind of set the whole thing on fire. Everybody was quoting it and repeating it and so on. And that really crystallized things. It is the same thing as what happened with the internet. In 96, 97, it wasn't obvious that the internet was going to be a development platform, but it did. It became that way. And the same thing is happening with Bitcoin. It is becoming a development platform that is going to become more and more robust. I'm not saying it's perfect. It has a lot of holes right now, but it is getting there. The problem that Bitcoin has is a bit of a marketing problem because there's nobody in charge. There's nobody in charge of messengers. There are people like me and others and Andreas Antonopoulos and so-called experts that are talking about it and trying to explain it. But I don't work for Bitcoin. The only people working for Bitcoin are the developers. So right now, Bitcoin is driven by developers, more or less. If you look at the success of anything in the marketplace, there are usually 4 phases. The first one is awareness. So have I heard about it? Second is education. Oh, now I heard about it. I want to learn about it. And after your education, say, okay, now let me try it. So we'll try it. And then you try it, you like it, what do? You stay with it. You become loyal to it, okay? Right now, the disconnect is that Bitcoin is, the majority of developers know about it, but they are in the education and usage stage. There is some loyalty, but not to a large extent. I mean, if Bitcoin would disappear tomorrow, it wouldn't be a big deal. Every developer would go back to what they were doing 2 years ago, okay? But it is getting there. Now, people like you and me that are not technical, where are we? We're in the awareness side. We are still trying to even know about it, to understand that. Some of you are in the education side. So we're trying to understand it now. And then some of you maybe are trying it. But I would encourage any one of you, if you don't own Bitcoin, just buy $10 worth of Bitcoin or $50. It's very easy. Get a wallet. Get a Bitcoin wallet on your smartphone or on your web. Transfer some money. Go to Quadriga CX. They are the largest in Canada. Or you can go to Coinbase and others. Get a wallet. Try to experiment with it. And then you will understand it. So right now, most of the messages are of technical nature, unfortunately, in the Bitcoin space. And the business messages are a minority. But I expect this to change. With the internet today, it's the opposite. We don't talk too much anymore about TCP/IP or speeds and feeds. We talk about what we are doing with the internet, whether we are selling something or publishing something, or our business is on it, the inventory is there, the supply chains are there. So we're not talking about internet in a business way, and the technology has come down. And you don't have to understand how the internet works. Do you know how the internet works? We don't have to. And now we're trying to rack our brains to see how the Bitcoin works, but you don't really have to understand how Bitcoin works. You just have to understand how to apply it. But we're not there yet. Some of the tools are not easy. If you downloaded a wallet, some wallets are a little bit geeky. You're gonna say, what is this? Why do I have to learn all of that? Well, we're still in the first phases. So just bear with us until we get to more friendlier products. But it's gonna get there. So the 4 pillars that I talked about, that I've been talking about, are the Bitcoin, obviously the Bitcoin, the currency itself, the blockchain, which is the backbone behind Bitcoin. Now, Bitcoin is not the only cryptocurrency. Once people saw what was possible when you put a currency with a blockchain, they said, well, let's copy this. And now there are multiple cryptocurrencies. So it's not just one. And some of them are saying, well, let's do a little bit better than Bitcoin. Let's do something different than Bitcoin. And it's okay. There will not be just one blockchain. There will be multiple blockchains. There will be multiple cryptocurrencies. Today, however, Bitcoin has the largest market share. If you look at all of the cryptocurrencies that exist today, Bitcoin is about 80 to 90% of the market capitalization, which is about $3.5 billion right now. And about 50 to 100, if not more, cryptocurrencies kind of divide up the rest of them. The fourth aspect that is very important in this whole revolution or evolution of the internet is decentralization. Decentralization is really part of what the Bitcoin is bringing to us. So these are 4 concepts that are different from each other. They are interrelated to each other. So it's important that you don't get too confused about this. I mean, confusion is free, but clarity has a price. But tonight, clarity is free as well, so we're going to go into that. Decentralization. It's important to understand what decentralization means and what it brings to us. Decentralization means that when you start something, if you look at all of the internet businesses today, the successful ones, Amazon, they started Amazon by having a center, by having Amazon at the center. They started eBay by having eBay at the center of things. With decentralization, you don't start with a center. You start with a protocol that enables everybody at the edges. It's a network at the end of the day, right? Bitcoin is the quintessential protocol that enables decentralization. Bitcoin is a protocol. At the end of the day, Bitcoin is just a protocol. It's a programming platform for money. It's programmable money, really. But who does it enable mostly? It enables people around Bitcoin, everybody around it. The 5 developers are not making money off the transactions, are not making money if a Bitcoin business is being developed. They're just enabling the protocol to propagate. And that is really what decentralization is about. But what it does, it empowers the people at the edges. Everybody at the edge, you and I and everybody, are the ones that get empowered because now the centers are not really in the way. So I can do business directly with any one of you. So that is better because it's faster now. There's no intermediaries. The structures are flat. The trust now is inside the network. I don't have to go to eBay to have them trust something or not trust something and be the ones that decide if I was right or wrong. We can program trust inside the network and let it run its course. That is possible. The other thing is that it's resilient against attacks because there are different nodes in that network that are redundant, that are doing multiple work. Like that ledger is multiplied and copied thousands of times. So what if one copy is not accessible in the next 10 minutes? There are other copies out there. So you can never really attack it as well. If there is a center, you attack the center, the whole thing stops. But if there's no center, you have to attack everything and then you can't. And then you run out of power, you run out of money. It takes you a lot more to put down a network than you would benefit from it. So as a result, you just let it live and it becomes strong as it is. That is really the promise of Bitcoin. And nobody can change it. It is changed by consensus. It is consensus driven. When the majority decides that it's a good thing, then it gets done because it only is there to serve everybody. It is not there to favor one person over the other. That is what the beauty is of Bitcoin's promise. It is not anarchy, though. Decentralization does not mean anarchy. There is a group of advocates, of Bitcoin advocates, that are so-called libertarians and anarchists, but they are a minority. But in reality, decentralization that is properly done is an enabler. It's about empowering us as users, as end users. 4 more concepts I want to talk to you about to kind of complete the understanding of what is going on with Bitcoin. There's this concept of the smart property. What is smart property? So it starts with digital assets. Everything on the internet is of digital nature, of course, because that is the nature of the internet. It's information. A digital asset could be an image. It could be information about a product. A smart property is a digital asset or a thing that knows who the owner is, who their owner is. So the ownership is attached to the thing itself or to the asset itself. Now that's powerful because if you change the ownership, then it's part and parcels of the asset itself, of the property itself. I don't have to go to another location to make a change of record for the ownership and then put it back. Like the car, my car ownership is separate from the car itself. There's nothing in the car. If I took that piece of paper out of the car, nobody can prove that that car belongs to me. But if they were all tied together, then if the ownership changes, it's all part of it. That's powerful because now it can move places. It can be programmed. And what smart contracts are these little programs that can run on the ledgers, can run on the Bitcoin network, and that they perform some smart and legal, and they can execute some legal rules between 2 people. So I could put a wager, for example. I could say, let's bet between me and Brian that the Raptors are going to go to the finals, let's say. And we'll just put a Bitcoin each. I know it's kind of touchy at this point. We'll put 1 Bitcoin each, and that's it. Then whenever the last game happens, automatically that smart contract is going to go and check everything, and boom, either I get 1 Bitcoin in my account, or Brian gets 1 Bitcoin in their account, and I haven't done anything. Nobody in the middle was there to check the scores, to tell me, oh, yeah, you give me your Bitcoin, I'm going to deduct 5% before I give it back to Brian. It's all peer-to-peer. We put the rule in there. Maybe the rule was it's 3 to 5, 3 to 4, or whatever. And that's a very simple example of smart contract. Now, think what can be done when you get a little bit more complexity into this thing. When you're signing contracts, let's say, that are require multiple signatures. If you're a lawyer, you know, sometimes you need 3 or 4 signatures to make something happen. Or if you have a joint account, you need 2 signatures. Same thing, why not make something legal if 2 signatures are required? But this is not all possible with the Bitcoin, with the blockchain and using Bitcoin. So trust is now inside the network. That's why you would hear sometimes the word trustless. So really what Bitcoin enables is trustless computing, meaning there doesn't need to be somebody in the middle that you have to trust. The trust is built inside of the contract, and the contract runs on the blockchain, and automatically it checks itself, and it rewards whoever needs to be rewarded. This is a very simple example, but it can go more complex, and that's really what's going on. So some of you are investors, so you want to know where to invest. It's a tough question, but I can tell you, here's an end user view of what is going on, where some of the applications are. I put them in 4 buckets. The first bucket is everything to do with money and currency. Okay? So Bitcoin is very easy to transfer money. Now think about payments, remittances. How much money, billions of dollars, are being sent around the world from developed countries to less developed countries? People that work in places and they send money to the Philippines, to India, and other places. Who's making all the money from them today on the transaction costs? Western Union and banks. But really, if you look at if you compare, if these were transmitted in Bitcoin, the transaction fees would be a fraction of what they are today. Why pay $35 for a transfer? Why pay $15 to Western Union if you can pay $1 and transfer the same thing? And it's faster. So it's going to get there. That's a big part. Another one is microtransactions. Anything under $10 on the internet, we should not be using any credit cards for that. We should be using Bitcoin for anything under $10. I mean, as a user, you don't care because you're not the one paying for the fee. But if you're a retailer, if you're the merchant, the fees as a percentage are more if it's a small amount, especially if it's $3 or $4, because there are minimums. But with Bitcoin, it's almost free. It's very, very small. So that's one aspect. The second aspect is what is called pegged services, meaning that you peg the ownership, let's say, this ownership of a digital asset on the blockchain. Because the blockchain is like a database, right? I said it's a database. So what's a database? A database is a place where you store value, where you store something, a piece of data. But that piece of data could be value. So the blockchain is a store of value. And I can just store that value and make sure that it is authenticated. Nobody's going to touch it. If I store my ownership on the blockchain, then that's it. If you want to question me, I'll give you the key and you can check it. You don't have to go to the municipal office or to the notary service to check it. It is there for everybody to see. So I can write my application as a property registration application or as an identity application, and then I just need a small piece of it that goes on the blockchain. And there's going to be a lot of that going on, and identity and ownership, for example. Third segment is smart contracts. So that becomes a business. I can run bounties with a smart contract. I can run escrow services, time stamping. Suppose I am delivering some work to you, and we put that on a smart contract, and you promise to pay me when I deliver. And then when I deliver, that's it. I get paid. You don't have to invoice me. It's done. I delivered, it gets paid. So that was a proof of delivery, for example. Or if I show up at 8 o'clock and then there's a time stamping of some sort that happens, then I get paid. Or if I leave at 5 o'clock, then you know how much time I spent at work. And there's a time stamping and I get paid, for example. So all of these rules can be embedded into a smart contract. And the Bitcoin can unleash that. The last aspect is anything to do with decentralization. These are businesses that are now fully decentralized, like peer-to-peer commerce. Again, why would we need an eBay if I can conduct commerce peer-to-peer in a trustworthy manner, where the reputation of the buyers and the sellers are public, and where there's no risk of fraud, but the transaction cost becomes zero. That is possible. That is going to happen. It is happening right now. Transportation. There is a company right now that is working on a competitor to Uber, where you download an application on your smartphone. The company is called Lazuz. You download it on the smartphone, and as you drive, you are giving information about where you're driving. And if you have 2 empty seats and you decide to take 2 passengers, let's say, and you're driving in a particular area, and somebody else is in that area, wants to get a ride. So for ride sharing, now you're sharing the inventory that is available in your car. And then you're earning points. You're earning cryptocurrency, Zooz points in this case, because you are emitting data. You are giving information about your location. What does Uber really know about what we are doing? I mean, they know about, they have all kinds of data about us wanting rides and the cars picking up people. So this is all data, but they are getting it for free. And they're not rewarding us for that data that we're giving them. Every time you order a car, it's data, where you are ordering it from, where you're going. But you're not getting paid for it. Only Uber gets the percentage and the driver gets paid. But what if you could get paid by just driving around? And if you one day you're not driving, one day you want to ride, then whatever points you've earned by sharing your data, then you can use some of that to get a ride. So it creates a new economy. And that is really what's going to happen. There will be many ways to earn cryptocurrency in ways that are decentralized. For example, what if I shared a part of my computer in a decentralized manner, and I earn some fraction of cryptocurrency because I'm sharing my computing power? Why not? Then I can earn that. It's sitting there, not doing anything. What if I shared some storage on my computer because it's sitting there? Then I can earn some cryptocurrency. And that is really what's going on, what's going to happen. A lot of these decentralization businesses are going to happen without the centers. Imagine gambling without a house. Why not? Because all the trust is in the network. It's going to be possible. Title transfers, real estate transactions, public registries, peer-to-peer commerce, all of that is going to happen. There are businesses, there are small companies right now that are working on these solutions using the power of the blockchain as a decentralized ledger. The last slide is an eye test, and this is the eye test. Recently I did this because I researched the marketplace, and I compiled about 500 companies in the Bitcoin/blockchain space. And I categorized them into 65 categories. But really the 3 main divisions are infrastructure, middleware services, and applications. So at the infrastructure level, it's really Bitcoin. Bitcoin is a protocol. So infrastructure includes a protocol. It's like the standards. So there are a number of companies in that space. Bitcoin is one of them. Ethereum, Counterparty, Ripple, and so on. And then there's middleware services. Middleware is like the glue between the infrastructure and the application. The same thing as what happened with the internet 20 years ago. I had a slide like this 20 years ago. I'm using the same slide. I just changed the names now. That's exactly what's happening. Infrastructure, middleware, applications. And now we're at the application side. People like you and I are going to use the applications. We won't care about the middleware and the infrastructure, unless you're a developer. Obviously, you care about it. And like anything, these are like the standards. And like standards, the good thing about standards is that there are so many of them to choose from. That happens. So Bitcoin is not going to be the only protocol. There will be a few others. And that's really the whole space that is happening right now. You can go and query that database to crypto.silk.co. You can find out what companies are doing, and you can search by categories. And there's 480 companies in it right now. Every day I add 3 or 4 companies that I just come across. So right now we are calling them Bitcoin companies, but maybe in a year or less, everything will be Bitcoin. It's like, what's an internet company today? I mean, only a few of them are just internet, because the internet is everywhere. So remember back in '95, we used to have directories of websites. Oh, this company has a website now. Wow, let's list them. And this company has a website. And now 67% of the Fortune 100 have websites. Wow. Now it's like, everybody has a website. The same thing is going to happen with Bitcoin. Right now it's a novelty. Oh, they are accepting Bitcoin. Amazon, when is Amazon going to accept Bitcoin? It's going to be why? It's going to make the news for a couple of days. But eventually, it's going to be all mainstream, and everybody will be on Bitcoin. So decentralization is the new internet. Get ready for it, basically. And the way to think about it, in closing, is this is the beginning of another 10 years of the new phase of the internet. If you think about the last 10 years, it was the social web. It kind of started in 2004, and its peak was maybe a year ago or so. There isn't too much innovation anymore in the social web. I mean, Facebook is Facebook, LinkedIn is LinkedIn, Twitter is Twitter, Google Plus is Google Plus, and so on. And then once in a while, there's Instagram and so on. But that's pretty much set. The landscape is set. Now we're all using it. Now, Bitcoin is in the early stages. So this is the beginning of, we can call it the trust web, or the cryptocurrency, the age of the cryptocurrency. But that is the very beginning right now. Yeah, it is murky, it is muddy, it is fuzzy, it is not clear. That's okay. That's how the internet was. And yeah, there are some bad actors. And yeah, there's some bad stuff happening. But same thing with the internet. But soon enough, the good actors were way more interesting than the bad actors. And then everything happened. So welcome to the Bitcoin economy. Thank you.
William, thank you so much for that really illuminating and informative presentation. I have a feeling that we've just begun to open Pandora's box, and there's a lot more that's going to change and revolutionize in the next couple of years. But I really appreciate your informative, and he has graciously offered to answer a few questions from the audience before we move on. Are there any questions that we'd like to ask William? It was very, very informative. Oh, John.
Yes.
One of the inevitable things that I've been reading about lately is the ability to bypass international laundering and other types of standards and the implications that could have for crime and terrorism.
Okay.
Any ideas about that?
The question is about, are you implying that Bitcoin, are you asking whether Bitcoin would facilitate more money laundering and the bad stuff? Well, in reality, it is not the case, because you know what the biggest money laundering vehicle is today? It's the dollar. I mean, and the banks are accomplices to some extent into that. Bitcoin is not totally anonymous. That is a bit of a misconception. Bitcoin is pseudo-anonymous. It is possible to trace some of these transactions. So if I wanted to do money laundering, I wouldn't use Bitcoin, actually. It is not a very good vehicle for money laundering or for bad transactions. Maybe at the very, very small levels, but that kind of stuff is better done with banks and by putting a lot of dollars in a suitcase and going somewhere and doing that stuff. But it is a misconception. It is a common misconception of Bitcoin, and it's a good question. I mean, but it is not. You don't have to fear that with Bitcoin.
Is there a standard exchange rate?
Okay, the question is, there a standard exchange rate?
How does somebody post something on eBay and get a certain amount of money?
With Bitcoin, you mean?
Yeah.
Well, Bitcoin is a currency that is exchanged. There are a number of exchanges, a number of trading places where you can buy and sell Bitcoin. Right now, the volatility of Bitcoin, right now, in the last 2 weeks, it's been relatively stable, but it has gone up and down. So I'm not sure if I understood the question.
Well, just with the volatility,
Yeah.
if you see something on eBay that costs $10, then how do you equate that to 1 Bitcoin or?
Oh, okay. Well, then you have to go to a place and see what the exchange rate is. That is what you do, really. And if you're a merchant, there are merchant services where you can have automatic exchanging of the currency. So if you don't want to expose yourself too much, as soon as you receive a Bitcoin, you can have it exchanged to fiat if you desire. Or you can save it and then see what happens. Yes?
I was just going to say, building on the question that was raised earlier, isn't a lot of the value of Bitcoin really tied to the fact that it, until now, is unregulated? And how likely is that to persist?
Yeah, so the question is in the value of Bitcoin and the fact that it's unregulated. Regulation is a big topic right now. It's front and center in governments' minds. And the best thing they can do right now is not to overregulate and not to create new regulation that doesn't need to be added, especially regulation that is doubling as something that would tax the companies that are in that space. The UK has recently published a report where it was fairly good. Apparently, I read it. It was fairly good in terms of not too much regulation. I mean, they were worried about anti-money laundering, but that's okay. I mean, that's normal. But they did not want to put a heavy hand into it. The Canadian Senate has been conducting hearings, up to 30 of them, and they are expected to release a report fairly soon. But so far, so good. They are not kind of trying to overregulate it. The big area of controversy today is what might happen in New York with this thing called the bit license, where they seem to be heading towards a direction where they might overregulate a little bit more than needed. But it's like a new thing. If you overregulate too early, you're going to kill it. The thing is just barely, it's like a baby. It's barely starting to to grow. So we don't know what the shape of it is. Let the baby grow a little bit, and then you can regulate once you see the shape of it in a few years. And that's really kind of my view on regulation.
One final question over here.
Yes?
Well, my main question is, if you wouldn't be using Bitcoin, who would you use to launder money?
If I wasn't using Bitcoin, what would I use?
Now, my question is, when you're talking about individual transactions between individuals, whether it's a gambling thing or anything else, what's the mechanism to trigger this, and where would all that storage take place? Within the, what to trigger that transaction, there has to be some storage, whether it's cloud or whatever else, and where and who would be acquiring and paying for that storage, where eventually it's going to be a ton of storage needed.
Right, so the question is, where is the storage, you mean in terms of computing storage? Where is the computing storage in the transactions when you're conducting a Bitcoin transaction?
Each transaction is going to have a trigger mechanism.
Right. Some of it happens in your wallet. So your wallet, it becomes, having a Bitcoin wallet is almost like having your own bank, because the transactions are recorded in your wallet. And when your wallet connects with the blockchain, then it knows to deduct so many fractions of Bitcoin. But it's like any other application. There's a part of it that has to run on computers. So you need like an off-chain. There's a part of it that is off-chain, and there's a part of it that is on the chain. And so it's like any other business. So if you're a casino, you have to write some software where you will accept these transactions, you validate them on the blockchain, but then there's something called cold storage. Cold storage means that you store these Bitcoins away from the blockchain in a place that is not even connected to the blockchain. And this is to avoid any potential potential security leakages or any potential attacks on it. So it's like putting something in a vault. It is totally disconnected from the network. So the idea is if you're running a Bitcoin business, you don't put all of your Bitcoins always, they're not always in the wild, I mean, in the accessible to the blockchain. You only leave a small part on the blockchain, but most of it is in the cold storage. But you do need to buy some cloud computing to do that. Not everything is running on the blockchain. It's on-chain, off-chain. It's a combination of the two. That's it. All right, thank you.
We really appreciate it, and a warm round
Thanks.
of applause for William. Thank
Thank
you
you.
very much.
Thank you.
Thank you so much
Oh,
for your
thanks.
time. If you're able to join us for the rest of the meeting. Ladies and gentlemen, step away from William. So the next part of our evening will take place on the other side of the hallway. You may remember, we were there earlier. So if you have 5 minutes to make your way back and find a comfortable chair of your choice there for your log, because I know that John will be entertaining us with. See you on the other side. Thank you.